Despite the global crisis, Dubai's skyline keeps growing. The Emirate, the most well-known of the 7 that make up the UAE, has had a decade of unprecedented growth. But now the talk around town is the impact the global recession will have on Dubai's and the UAE's future development.
People are talking about this year as being a very bad year. Certainly, I mean, if we see what's happening in the US, there are still some horror stories coming out of the banking sector. A lot of people are asking themselves what will happen to property prices in the UAE this year. How far and fast will they fall?
Last year Dubai was still growing fast. Over 8,000 new businesses were licensed. Businesses which drew in tens of thousands of expatriate workers. Now though, thousands of visas are being revoked every month as people lose their jobs and leave the Emirate.
A big driver of private consumption was the influx of expatriates. At the moment, it's important to point out that actual figures have not come out, and there is a lot of rumours and speculation. That said, we do believe, though, that the population growth in Dubai will sort of come down a bit this year.
The impact of the global crisis has also meant that some of the UAE's larger projects have been put on hold, with, according to a report by HSBC, some $75 billion worth of government projects having been suspended or cancelled.
If you look at the size of the projects that were planned for the UAE, Abu Dhabi and Dubai, and of course the other Emirates, they were so huge and of such a huge capital requirement that it's inevitable that some of them have been rescaled, timelines have been reviewed.
Dubai, though, is moving full steam ahead on some of its massive infrastructure projects, such as the construction of the multi-billion-dollar metro. Although there is some concern over the Emirates' level of indebtedness and the ability of its companies, both public and private, to secure the credit they need to continue their rapid expansion.
In fact, lending was expanding incredibly fast over in 2008. It was up to 50% annual growth. So it's not surprising that, given the current circumstances, credit is tightening. I think the central bank has tried to re-inject liquidity to the banking system, but so far it's not had the desired effect of freeing up credit.
That's not to say, though, that all the country's Emirates will suffer to the same degree. Abu Dhabi, with 1/10 of the world's oil reserves, is best prepared to cope with the downturn.
In Abu Dhabi, of course, there are large savings from the recent boom in oil prices. So to some extent there's a big cushion there, particularly for the government, to keep on with its big infrastructure projects.
And the Abu Dhabi authorities maintain that its plan to expand and diversify its economy is still on track.
When it comes to our cultural projects, our Formula One circuit, the other important milestone, I would say, projects, they are all going on track, and we are all still continuing with them.
The UAE at a federal level also intends to counter the downturn by increasing spending some 20% this year. And even with oil at its current low price, the country is expected to balance its books.
One thing that's important to note is out of the GCC countries, UAE still has a very low budget break-even point, and even with our assumption of oil prices $50 a barrel for Brent crude, we still expect to see a surplus on the fiscal account.
Still, there's no question that the economic landscape in the UAE, and in particular Dubai, has altered, and a new reality has begun.